Hey everyone, the housing market inside the United States, the UK, Canada, Australia, and New Zealand is crashing. The housing market is crashing. And we're going to talk a little bit about how that impacts you and how it might impact you depending on various scenarios and kind of what you can do about that. So let's jump right into it. Why is the housing markets in all these different countries all being impacted simultaneously? And of course, a whole bunch of other countries that I didn't even mention. But that's where mostly folks that watch these videos are coming from. This is happening due to climbing interest rates. So in the United States, interest rates for a mortgage on average went from 6% up to 7% in just 2 weeks. It is climbing faster than it has ever climbed before. Basically, people who got mortgages 2 weeks ago got a slam dunk bargain compared to people who are applying for mortgages this week. This is having a tremendous, it's like a bucket of cold water being poured on the red hot housing market. And as this starts to cool, year-over-year sales inside the United States are down 19.5% for houses across the board. Down 28% for luxury houses or upper-end houses. That's a big deal. As house sales plunge, that means that people who are starting to try to sell are going to get no offers. They're going to have to drop their prices in order to get that sale. And that's going to cause everyone around them to lose value on paper of their house. So how much is your house worth? Your house is worth whatever someone else will pay for it. If no one else is willing to pay anything for it, well, then it doesn't really have any value. Now, I know you're going to say, but it has value to me. But we're talking about according to the bank. You have a mortgage possibly, and if you have a mortgage, how much does the bank think your house is worth? Your house could be underwater already. If you just refinanced up as much as you possibly could just recently, you may be underwater, which the amount you owe on your house is worth more than the value of your house currently. Now, it is starting to turn. It has not fully turned just yet, and so we're not seeing a plunge in house values just yet. We are getting to that point where everything is lined up so that the house prices will plunge, but we are not getting catastrophic numbers just yet. So we are looking ahead. We're looking ahead at some of this stuff. So why is this happening? It's because new home buyers are trying to apply for a mortgage, and they're looking at the interest rates that they're going to have to pay. And from their perspective, it's making houses more expensive. Now, for you as a seller, it doesn't make houses more expensive to you. In fact, it's going to make houses less expensive as you try to sell, because home buyers can't afford quite as much house anymore. They're wanting as much house as they can get, but they can only pay this much amount of money because their mortgage is going to, the interest rate in their mortgage is going to eat up the rest. So who's taking the hit? Home sellers are going to take the hit. Banks are still going to get their mortgages. Buyers are still going to, if they want to buy a house, they're going to have to buy a smaller house, or they're going to have to get that house for a lower price so that their interest rates can still be paid. So if you are underwater, that's an impact right there. You are looking at potentially having to repay your mortgage for more than what your house is worth, which takes you to the point where you might want to just walk away from the house. It might actually be beneficial to default on that loan. Now, I'm not suggesting that you do that necessarily, but I'm just saying it gets to an absurd point where you might actually be better off financially walking away from the loan. Now, if you lose your job, if you lose your source of income, or if something goes crazy in the markets or whatever, and you are unable to pay back your loans, this is a viable option at that point. Yeah, you're going to have to declare bankruptcy. You're going to have to do what you can to get out of it, but if you're underwater, that's where that is. Now, where this really gets the rub is if you try to refinance. Well, one, interest rates are through the roof. So if you try to refinance, you're going to be paying much higher interest rate probably than what you already have. So if you're trying to get more money out of the equity of your house, and then also the fact is that they're going to start lowering what they believe your equity in your house is. So you're not going to be able to borrow quite as much money. So that's going to bite you two ways. It's going to bite you that you're not going to be able to draw out as much money out of your home. And the other thing is you're not going to be able to, you're not going to be able to get a low interest rate on that, right? And then for some of you who are already a little bit over leveraged on your homes because you're renting out properties and using this for investment purposes and stuff like that, good for you. There's a lot less of you out there, but and you're probably already paying attention to that. If you become, as prices of houses drop more and more due to the fact that all your homes are down, that's going to put you in a place where you may realize that you're a little over leveraged, and if you need cash all of a sudden, you're going to have a hard time getting it. So be careful on that. You probably don't want to be as aggressive right now. Wait until house prices come down. Don't catch a falling knife. If you're looking to buy your first rental property, or if you're looking at buying your first home, realize that house prices are going to come down, but interest rates may continue to go up. The more cash you can build up, the better off you will be. If you can pay down cash, or if you can pay a larger down payment on cash, that means your loan will be less, which means the interest rates, the interest that you'll pay is going to be significantly less as well. If you can pay for silver, pay with silver and gold. That is definitely your best option right there. So you're not holding cash and having it lose value while it's in your hands. And finally, let's look at selling your home. If you need to sell your home, if you're trying to sell your home from a city and you're trying to move out to the country, because that is a sensible thing to do in this age where nuclear war is a distinct possibility, as well as the fact that people in the cities have a tendency to lose their minds and start rioting. That can happen at the drop of a hat. So if you're trying to sell your home, realize that you're going to have to sell it for less because the buyers are paying much higher interest rates right now. But also, if you can find someone who will buy with cash, you may not have to cut your home price quite so much, especially if someone's trying to unload cash in order to, get out of cash and get more into property. So if you're looking to sell your home, you might want to market more as a rental property, because those are the kind of people that might actually have the cash to drop on a property like that. So housing prices have now plunged 77% of U.S. metro areas. We're seeing that beginning of the drop. It's broad-based. In the United States, it's dropping across the board, but it is not. We're not seeing the catastrophic type numbers that we did in 2008 just yet. But if interest rates keep going the way they are and the housing market cools off, if more and more people become unemployed, there's going to be a whole lot less buyers out there, and there's going to be a whole lot more people trying to sell. And that's going to just be devastating for prices out there. So we're seeing this across the board, not just in the United States, but in the UK, as well as other countries. Wherever interest rates are going up, we're seeing that house prices are starting to come down, and that is not a trend that's going to be reversed very quickly. It's going to keep on going like that. So this is going to have a tremendous impact on you, tremendous impact on the people around you, not just your little niche or your little group of people, right? But the fact is that everyone you know is going to be kind of getting these struggles. Anyone who's trying to move is going to suddenly have a massive headache because they're going to sell their house for less and have to buy the next house essentially for more because of the interest rates. This is going to be a tremendous stress for anyone who's trying to shift jobs, trying to move to a new job. You're going to see a lot less people jumping from job to job because the housing issues related to buying and selling homes is getting ridiculous. So expect less people to be moving jobs. So if you're looking for employees, if you're looking for workers, you're going to probably have to start looking a little more locally. which is going to make that the entire economies across the world a lot less efficient. You're not going to be able to get the right people. So think about what you can do to do virtual employees. If you can allow them to work from home, from wherever they are, in order to work for you, that's going to definitely be in your benefit. So think about moving away from physical offices if you can, and move more towards working from home situations. That's going to be definitely something going forward. Ever since the cough, we've definitely had to deal with that, and it's definitely the way things are going. So if you guys have some thoughts about the housing market, or you have some personal experiences with the housing market that's going on right now, if you pop those down in the comments down below, let us know what you're seeing. It's helpful to other people, and I appreciate that. There's a lot happening. A lot of markets, a lot of food shortages, a lot of everything going on in the world, crises with regard to energy and conflicts out there. But housing market is where it's really going to hit a lot of Americans right in the savings, because that's where a lot of Americans have their savings. And I know that's true in other places as well, a little more so in the United States. But be aware that this is going to have a dramatic impact on people's understanding of money and what's going on with the markets. All right, folks, if you found this video useful, you might want to check out this other video from me right here. Otherwise, I will see you later. Steve Poplar, out.